early light, what so proudly we hailed at the twilight's last gleaming, whose broad stripes and bright stars through the perilous fight and the ramparts we watched were so gallantly streaming, and the rocket's red glare, the bombs bursting in air, gave proof through the night that our flag was still there. Oh, say does that star-spangled banner yet wave o'er the land of the free and the home of the brave?
Good morning. Welcome to World HD on this Tuesday, Debt Tuesday, where it's a good day to look at debt, right? Because we have the Federal Reserve, first day of the Federal Reserve FOMC meeting today, and a couple things going on. We have a couple things going on with the Federal Reserve. We have this Lisa Cook trying to get her ousted for some mortgage fraud. And then we have Stephen Myron, okay, who's been on the Economic Council, and now he just got fast-tracked onto the FOMC. They say that it's a temporary position, but we'll see what happens with this. So some interesting things going on with this debt day. So today is Tuesday, September 16th, 2025. And good morning to all of our early risers out there. We got BDG, yeah, good morning out there. Trumpet, Geo Rich, Crash and Splash. And so the last couple weeks has been tough for me. The whole thing with the show and then that going down, and then just watching what's going on is really the real tough part. And then watching what's going on yesterday. The title of the show today is Vance hijacks Charlie Kirk's turning point. And last night I was on with Aaron Day a little bit talking about this technocracy movement. And so I'm going to spend some time on that today. I want to go through some of the headlines, talk about some of the markets. That's the other thing, too, that's been tough is, I really thought that at this 21,465 we would see, and we probably still will, it's just very frustrating at this point in time. I thought we would see at this 24,165 in the NASDAQ. We would see the market kind of hold up there, okay? And then we would see the same thing in the S&P, that 6574, I think it is, right? That number. And we haven't seen that in the equities. And we had this contract roll, which makes it murky, where, you go from this September, and we'd been following the harmonic structure really, really well. It was messy, don't get me wrong. There was bouncing around between, the halfway and the full upside. And then when we flip to this December, we see that, it actually did get to the full upside objective on the NASDAQ back in August. Then it did it again, just recently, and then it blew through. Okay. So, with this debt, with it being debt day and talking about this and talking about the Federal Reserve and talking about them starting this lowering rates situation, stocks are on their all-time highs. We know we have some inflation out there, okay, at the household level, right? People are seeing food costs, right? They're seeing, the cattle markets through the roof, right? Why is that? Not for good reasons, okay? Because, again, some of the cattle's been taken out with these, right? There's, it's a whole story unto itself. But the point is cattle market's rising, and it's not a good movement, right? It's not a healthy movement. There aren't a lot of ranchers who are participating in this because the ranchers have been taken out of the game, okay? And there just isn't as much meat and beef protein out there as there has been in the past, okay? So this is all getting taken out. And so we see that there's lots of inflation at the household level. And then yet we have deflation on a global level. Okay. We see this coming out of China. Okay. We've been talking about that, right? Watching these inflation numbers, the CPI, the PPI, right? The personal consumption expenditures, all these different things we can use to look at the different inflation, deflation measurements and get a read on that stuff. And so, we take all this in and we have debt day and we have massive amounts of debt. I haven't looked at the debt clock in a while. I'm assuming it's probably at 37.5 trillion now. We just cracked 37 trillion earlier this year, but I'm guessing, I haven't looked at it, but just at the rate that thing goes, we're probably at 37.5 trillion. We're facing some sort of a funding issue, coming at the end of this month. Okay. Are we going to go into another government shutdown? And my big question is, how do we do this? How do we pass this big, beautiful bill that's supposed to give us all this funding, right? And then we have this, and again, they go through this rigmarole, right? Where it's like, okay, well, we passed the funding, but that's for this and it isn't for this. And so there's all these gamesmanship that goes on. And that's what I'm going to get into a little bit today. Again, it's not my strength on the political side. I'm aware of what's going on. I think I have a decent read on it. Um, and my read is that it's just corrupt. I mean, the bottom line is that's my read is that, that the system is just really corrupt. And I think today I want to go through this with JD Vance and show this stuff because last night, I was going through this with Aaron Day and we were talking about it and it almost gets to the point where, it's just a very concerning outlook when you really lay the facts on the table. And that's what we're going to do is we're going to spend some time. Aaron Day and I and a few others are going to spend some time laying out this technocracy, the map, okay, and putting all this stuff out there because I think it's so important. One, for us, because, if we're going to be talking about this, it's very nice to understand, and a lot of these things are probabilities, like we were talking about last night. We can't be sure that this and that are connected. We have a high degree of probability of 70 to 80%, 90%, 60%, something like that. So it's over. And then we take it, and then once you do that, you go from that, point A to point B, and you're 70%. Let's just say you're 70% probability that that's the case. And then when you go from point B to point C, and it's another 70%, say. Well, if you multiply those two, your probability is now below 50% of being correct, right? 0.7 times 0.7 is 0.49. So now you're less than 50% chance of actually being right from point A to point C, right? Because your difference from point A to B is 0.7 and point B to point C is 0.7. So ultimately you end up at a 0.49. So now you're less than half the time you're actually accurate on your. So this is what you have to be careful of when you're going through this stuff. But some of the writing on the wall is so obvious right now that it's so concerning. So we're going to get into that today. I want to go back and double back to the corn market because Trump had asked a great question on Friday. And I want to go back and cover that. I meant to cover it yesterday. I was going to hold it till the end and then I skipped past it, and then I didn't cut back to it. I just forgot. So we're going to cover that. I put that up toward the top today. And then we'll dive into this whole thing with the JD Vance and the hijacking of Charlie Kirk's show yesterday, because I think this is so important. And it helps me. I think it helps me to talk about it. I don't know. It's just I don't know what the right word is. Here's the thing. Let me just say this, right? After Charlie Kirk got shot, okay, and we see that horrific event. And then, you turn on LFA, you turn on these different, independent media outlets, RAV, right? Band.video, Alex Jones, right? And you see this anger. And, yeah, it's terrible, right? It's an absolutely terrible event for people to see. It's a terrible event for, Charlie, who was doing so many great things. And it's also terrible for the people that were there, right? It's just, there's so many things you can start saying, well, wow, that really curbs this and it really ends that and it really puts it. And then you see how integral he was in the political scene. The White House listened to him. He was in with yesterday, was it yesterday or the day before? Anyway, we've been watching these clips of how integral Stephen Miller was on yesterday with JD Vance, and they were talking about how Susie Wiles and Stephen Miller, and so he was involved in a lot of that. Okay, so that's great, right? That was a great. People can love that, they can not like it, they can hate it. It doesn't really matter. But the point is, the real anger should be coming now once you see what's really going on, right? And that's what I hope to be able to point out today with JD Vance that this is we don't know whether this was a staged event, but boy, it sure was very convenient for this process. From point A to point B to point C to point D, as we move through this quote unquote technocracy. Okay, and I probably have to define that, even though it's a very hard thing to define, but I'll probably define that as we get into this. So anyway, so that kind of sets things up. Let's get through some of the headlines, get through some of the notes. We don't have a lot of headlines today. I kind of skipped through that. Let's hit some of this stuff. So again, we have stocks at record highs, the S&P, the NASDAQ, not the Dow, right? The Dow's still not participating. Thought maybe it was going to take a leadership role, and then it didn't, right? It just kind of stalled out again. And we're doing this rate cut into, these record highs. All right. And so, we had some good questions last week. What if we get a 50, I think it was Geo Rich, it was asking, what if we get a 50 basis point cut? Would it Royal Markets? Yeah, probably. It would make people think, like, what does the Fed know that we don't know? Or what are they, I think of it more than this. I don't think of it that way. What do they know that we don't know? I think of it as, what are they up to that we need to pay attention to? Okay, so what are they up to? What are they trying to do? Because I really think that we're at this point where, it, we're getting to the point where, again, I talk about these sovereign debt crisis all the time. I mean, these things are going to, at some point, this is going to happen, right? It's either that or we're going to need a massive false flag and a massive war, something to cover the whole thing up. And that's what we keep getting is diversion tactics, right? Okay, here's this, and then, look over, don't look at this, right? Look over here, right? We've seen that with Epstein. We've seen that with, do they want Epstein stuff to be in the headlight, in the front, in the light spotlight, or do they not? You know what I mean? And they can move and shift the narrative so efficiently. And even though independent media thinks it's being independent, I'm not sure that it really is, because where do we get our clips? From Fox, from, these places. Where do we get our talking points? From the things that they do. So I'm not as sure that we're as independent as we think we are. And that's what that's what I hope to be. All right. So we've got that stuff. We've got the start of this 2-day meeting of the Fed. Okay. We've got President Trump trying to block this Lisa Cook for mortgage fraud. And it didn't go through, right? Temporarily, the court held that up. Okay. Then we have this Stephen Moran, who's been on the Economic Council for the Trump administration. And he, yesterday or this morning, I don't even know when it was, but it's definitely been fast-tracked. Okay. He's got Senate confirmation. He'd already been through the Senate confirmation process. So they've already greased the skids on this. So that was probably going to happen. Once they got him, slated in to have the Senate hearing, it was probably going to go pretty quickly, and that's what happened. And now what we want to see is, the world will be watching, the financial world will be watching. Is he a dissenter? Okay, is he going to dissent? The financial world is going to be listening to see what is his role in this whole thing. Okay, so those are the two big headlines. And then what I want to do is let's jump in here and look at some of the data today. And there we go. I think we're good. Okay, let's look at some of this. Let me clear this off here. See if that works. Okay. All right. So let's look at again. We've got our economic data for the week since, so I think most of you saw this yesterday. I'll just briefly go through this yesterday and go through this again today. So we had this Empire State Manufacturing. I think this came in at like -8 or something like that. Again, it was expected at 4.3. That wasn't a good read yesterday. We talked a lot about China yesterday, right? This fixed asset investment, foreign direct investment, this attrition, right? That sort of just letting China dig its own grave, right? Let its economic system play out, right? Let's see what happens over the next months. And so we talked about, how I believe, right, that this Trump administration has been utilizing other countries, right, to put pressure on China and stepping back, right, for, the big negotiations that Secretary Treasury Bessent is trying to set up these meetings between President Xi and President Trump for some time in October, November timeframe this year. So, and then we talked a little bit about the TikTok yesterday, and then, some of the other things surrounding this whole China, and, the NVIDIA, right? There's a lot of things going on there. So that's why we're paying attention. On the back burner for today, though, but yesterday we kind of dove into that quite a bit, just as a refresher. Then we had the retail sales. We'll get retail sales out this morning at 8:30. It used to be a big number. We'll see if it has any impact today. And then U.S. industrial production, usually a smaller number, not so big. And then the NAHB housing index. Okay, so again, getting back on this housing. Housing is really important. All right, and so we'll see what that read is today. I think that one's out at 10 o'clock. So we get the retail sales, industrial production 8:30. We get the NAHB out at 10 o'clock. Then on tomorrow we get A few things out of Europe, CPI, and then we get this German 30-year bond auction. Watching the bid to cover, right? We talk about that. What's the rate that the debt comes out at? And then also, how well is it absorbed? Okay, how many people are showing up to buy this debt? And that's why we watch this bid to cover. So we'll be keeping an eye on that. We get a little more housing data out of the U.S. Building permits and housing starts. Okay, expect one of them is at 1.36 million. The other one's expected at 1.37 million. So we'll be watching those two, see what happens there. It gives us 3 good housing data points this week. And then we start off with this whole series of bank announcements, right? We get the Bank of Canada, the U.S., we get Great Britain Thursday morning, we get Bank of Japan Thursday night, and into Friday morning, right? When they'll actually have their statement. They'll actually have the head of the Bank of Japan will come out and actually explain what their rate decision was. So that'll stretch through really Wednesday, Thursday, and into Friday morning. We'll get a lot. And then we get these European meetings that kick off this week, right? This ECOFIN meetings and this Eurogroup meetings. Okay, that covers that. So we've got today's data. We have retail sales, like we said, out at 8:30, expected at 0.2%. And then we get import prices expected at minus 0.2%. And then this NAHB housing market index expected at 33. So we'll keep an eye on that, take a look at that tomorrow, come back and reflect on this. This is the first real U.S. data we've got coming through this week is today. Okay, so that gets us through that. And then we have a few headlines. Let's go through these. So again, Trump blocked and firing Cook. We talked about that. Stephen Moran confirmation in the Fed. He'll be involved in the FOMC meetings today and tomorrow. And then we get this corporate reporting. All right, so I want to talk a little bit about this. So the corporate reporting. It's yesterday. President Trump was out saying that he's promoting the idea that corporations only have to report every 6 months, right? We're on this quarterly. We talked about this with the futures, okay? We've got the futures markets, or especially the financial ones, right? The 10-year note, the debt, the U.S. debt markets, U.S. stock markets. I think those are the 2 primary ones. They're quarterly, okay? So they match this quarterly cycle that we have in the U.S., right? Every 3 months, corporations report. All the information flows in, and it's something we're pretty used to. The talk is revising this every 6 months. Now, in theory, this is a great idea, okay, because you want people to take a more strategic, long-term approach rather than always trying to just meet, to target earnings, okay, which is every quarter. The problem is this, okay, so what does this do for our system? So it would give us this more long-term strategic focus, but it also gives the ability to hide and mask things longer with longer intervals. So it's a double-edged sword, okay? So, and it sounds good, okay? I really would like this if we were in a period, if we had just gone through fall and winter, right? And the shoots were, and we were getting spring, fresh spring shoots popping up, okay? And we were getting this whole new growth cycle. I would really be for this. I think it would be great, right? That's when you want to take this long-term strategic approach, right? When you're getting, when you've got, new growth, you've got fresh, everything's fresh, right? And we've gone through fall and winter. Problem is we never go through fall and winter. We just keep perpetuating it with more bills and more debt and more this and more that and more this scheme after that scheme and so forth. So in this late stage, and again, what does this mean, right? Stock market, just continues to rip. And why? Now we're coming in and we do this ratcheting, right? How many times are we going to be able to, quote unquote, lower rates and drive this market to new highs? So we've been through this before, right? We went through this in 2023, end of 2023. It was really rampant end of 2023, right? It was this constant talk of how many rate cuts, how many rate cuts, how many rate cuts, right? And the market rips, right? And now we're doing it all over again. So it's this constant talk of rate cuts. And I think I think what we'll do is, let me go through this and then we'll get through that. Let's just jump over the charts because I want to talk through this. Otherwise, we probably won't get to these charts today. So anytime we get change in accounting, I'm just not so sure that at the point where we're at in this, this stock market economic assessment, right? That's what the stock market is. It's kind of like a gauge, a meter, right? That measures where are things, are things getting better? Are things getting worse? Are things staying the same? Where are they? And now we come in and we're doing this new accounting policy. To me, that just doesn't feel like the right time to do it. I like the idea. I just don't think the timing is very good. Okay. That's my opinion on it. All right. So let me jump in here. Let's take a look at some of these charts. And let's take a look at this. So this is our NASDAQ. All right. And it's this is the September contract still. Okay, so this is going to expire Thursday. Pretty much they're trading and it's wrapping up. I just want to look at this because you can see the yellow circles I put on here, the reaction to the harmonic structure, right? Especially these. Let me just mark these because I really want to highlight this stuff. You know, this area right in here, the first time up to the halfway, it hesitates, gets above it, comes back and retests it 4 times, right? Where that purple shaded area comes back down and tests it. And then it rallies again. Then we get a retest of the halfway, you know, back here in early August. And then, you know, you can see, you know, a lot of trading sideways back and forth. Then we get the full upside objective. All right, great. Okay, let's flip over here and take a look at this now. So here is the December contract. All right, this will look a little bit different. The date is, this is the front month now. So there's a lot more volume coming through in the last couple days. As the volume fades off in the September, it picks up in the December almost immediately. And this flip from September to December happened Sunday night. Okay, Sunday night on the open of trade, Sunday night. So you can see if we look back, okay, back in here on this NASDAQ, we almost got here back in this area, which was end of July. We didn't. Then we came up and retested. We got the full upside objective here on the December contract. And it probably would have been good to be watching this. The problem is the data is very thin. You know, this is what it looks like back and then. You know, back at that point in time, right? You don't have a lot of data. And so that's why we stay with the September. And it was reacting so well to that harmonic structure. However, it would have been good to be looking ahead, okay, and saying, where is the December contract? Because we're going to get there, you know, in mid-September. And when we do this roll, how we already gotten there, okay? And we did, and we get the big sell-off, okay? We get a nice sell-off here again. This hit that on mid-August. We get the sell-off, okay? Then we retested up in here. Let me mark this. Okay, so we retest it here on September 4th. Okay, so that's going into the weekend, last Friday, 2 Fridays ago. Is that right? I think 2 Fridays ago. So not this last Friday, but the Friday before. We get that. And then it trades around there, and then it just takes off. The December contract is through this area. So again, we want to see a reaction here. Right now, the reaction looks like this thing's just accelerating. Okay, now tomorrow's the Fed rate announcement. We've got all these central bank rate announcements. Okay, not a lot of data, but anything can happen, right? And we could see this thing come back. So again, that's what we're watching. So again, as much as I don't like it, I don't like what's going on here. The bottom line is 24,165 now becomes a line in the sand. So let's just go ahead and flip this over, make it white, and turn it to dashed. Okay, and there it is, right? So now it's an old harmonic. It's been hit. We probably could have done this back in here, you know, back in mid-August, right? If we were on the December contract. Okay, so that being said, now we're above that. At this point, you know, who knows what's going to happen. This market, the way that it trades, again, anything can change with all these central bank announcements. But as it trades right now, you have to respect the upside, okay? Because it's just, you know, it's just on fire. Now, it hasn't been heavy volume. Can change very quickly, but that's our line in the sand. That's what we'll be watching. See if this comes into play, right? This 24,165 proves itself to be very important on this December contract, on this new roll. Now let's take a look at the S&P. All right, hopefully I haven't trashed this because we've got so many charts on here. Hopefully I can find what we need. Okay, this should work as it fills in. All right, so this is all right, this should be good. Not so good. This will work. Let me shrink this up a little bit. Okay. All right, so this is the December contract. What I also want to do is look at boy, we just have a million. I got to clean this up. We have a million charts on here. September. All right, so let's let this fill in. So this is, again, let's start with this. So again, we started with the September on the NASDAQ. Flipped over to the December, went through that process. Let's keep it consistent here and do the same thing with this S&P. So here's the 6574, right? The market, and it's slowly backfilling. There's a lot of data and just tons and tons of charts. So the machine's working pretty hard right now. But the point is, it's clearly above the 6574 on the September contract. The volume's going out of on the S&P. Volumes coming out of this contract, moving into December contract, and this will expire, basically stop trading in another day or two. Okay, I think it's on Thursday it'll stop. So there is the September contract. You can see, I'm not going to spend a ton of time with it. You can see we're above the 6574, the bright green line. Now let's go back here and take a look at this. All right. Okay, and here's the December contract. So same kind of a thing. We almost got there back in here. This was back in mid-August, but we didn't. But the NASDAQ did. Remember, the NASDAQ got there mid-August, which is this area right in here. Okay, but the S&P didn't. Then the S&P got there, and I have a funny feeling the NASDAQ didn't at that point, right? This was late August, okay? They were kind of back and forth, right? If you remember, we were talking about the NASDAQ was kind of leading, and the S&P was kind of leading, but the one thing that was for sure is the Dow was never leading, okay? The Dow never was pushing to new highs. Okay, and then we see a little bit of trading around in here, and now it's clearly above, and you can see the difference in the bars, right? These bars up in this area are a lot tighter, and because the volume's coming into this market, right? The other ones are sketchy because, again, these are constant volume bars. So every 25,000 times that it trades, it prints a bar. Okay. Then it moves on to the next one. Then it prints a bar, open, high, low, close. When you don't have much volume, you get very spotty bars, right? Because there isn't much volume in this contract and it takes a little, so they get more wispy looking bars. Now you can see it tightening up in that, that circle I put up in here. Let me put that in a rectangle. Okay. And a lot of this, people may not care because, it's the futures market and they have no intention of ever trading the futures market. But I just want to go through this for people who do care in the sense that this, again, I'm still thinking that the 65.74 can be important as a line in the sand. We don't know, but right now we have to respect the upside. And you can see as these bars get smaller, this market is just marching on the upside, right? This is not what I would have expected, but it is what it is, right? And so again, this is why even though we think we know what's going to happen at a level and we think we can find this stuff, and even though I've been short this market and trying to short this very, very small, right? As small as possible, keeping position until something starts to work and prove itself, okay? So now you're just trying to hang in there, tread water with the idea that it'll come back to the 65.74 on the back of all these central bank announcements. And something will catch the market by surprise. Or people will just here's the other thing to consider, is that when you get big events like this, and this event is very, very spotlight now, right? With Cook and Moran and President Trump and Jerome Powell, all eyeballs are going to be on this event. And so if you're going to try to move a big position, right, and you're what I call an elephant, you want when everybody's eyeballs are on there. So there could be a lot of volatility that comes, right? That's what we want to watch for see if there's a lot of volatility that comes during this, this FOMC rate announcement. It'll start off at 2, and Jerome Powell will come out a half an hour later. He'll give a speech, and then he'll take questions. Okay, so that's the process. And you can get a lot of knee-jerk reactions. You can get the initial reaction, then you can get Jerome Powell's announcement and his speaking, and then they read into that, check to see what words have changed, and then they ask questions, right? And then so there's a lot of things that can go on that day. So my recommendation is if someone's actually trading, be very careful, right? It could be very treacherous, especially if, the big elephants are trying to get out. But maybe they're not. Maybe this is just up and away. So that, again, this is why we watch these levels. This is why I watch these levels to figure out. Right now, you cannot deny that it's above both of those levels, and this market is on the upside. If we come back and we retest these levels and they start to break down, now what we need to do is reconsider things and say, okay, is there some kind of a topping formation forming? Was this tricky? Did they use light volume to push it higher to basically bait everybody in? And then as soon as they get a lot of eyeballs and big volume, are they going to come in and sell, right? These are the footprints that, back in, late 2024 that I was talking about, right? We saw, the DeepSeek, okay? Well, we saw the tariffs, right? We saw the DeepSeek announcement. And then we see, and then we see the tariffs out of Canada and Mexico. Then we see the next weekend, we see these gaps, the same kind of behavior, yet there's no announcement. There's no data. There's no event, right? And we still get the same kind of a reaction. It's those kind of things that we're watching for, right? To see, like, what are they up to, right? When they move positions, usually you can figure out what they're up to if you're looking close enough, right? And that's what I try to do while I'm trading to help navigate these harmonic structures. All right, so that's that. Let's take one quick look here at the Dow. Because it just is not participating still. See if I can find my mouse here. Okay. All right, let me go to this. Okay, here's the Dow. And here is the Dow on a daily. here's the 5,000 tick, but I really want to show this on the daily because it definitely highlights it better that we can see it really hasn't been participating. I think this will work. Okay, so this is a chart we've been referring to quite a bit. Let me clear this off here just to make it a little bit still messy. So we have the 4 circles, right? We have the highs. Let's see, we get a little bit of retail sales data out here. We just hit our 8:30 time frame. Let me check this out. Okay, so let's just go through this, then we'll come back and finish up the Dow. So we've got August import price index. Month over month came in at 0.3 versus minus 0.2. We didn't have that on our list. The one, not a huge number, Canada CPI, we didn't have that on our list either, but it was expected at 0 and it came in at minus 0.1, so that's a little bit deflationary. Let me flip over to this, actually. We'll just take a look at this together. Okay. So there's that import price index, 0.3 versus minus 0.2. Canada, minus 0.1 versus 0 on the CPI. So again, a little bit disinflationary to deflationary. And then we get August advanced retail sales at 0.6 versus 0.2. So that's a very strong read. Ex autos, 0.7 versus 0.4. That's a strong read on retail sales. So that tells us the consumer's still hanging in there, right? The consumer continues to buy. And look, that adds justification for a stock market rally. Let's see if we're getting anything else coming in here on this. So we get prior advanced retail sales are revised higher from 0.5 to 0.6. So again, that's good when you get a good read and you get a revision up from the last month, right? That's kind of like a double whammy, all right? And then we get prior retail sales ex auto, month over month revised higher from 0.3 to 0.4. So again, that one's higher. And we get retail sales ex auto and gas revised higher from 0.2 to 0.3. So again, all in all, incredibly strong retail sales number. And let me see if there's anything else we wanted to look at on there. I think that does it. That's the big takeaway. So again, look, that's very supportive of higher stock market, right? Consumer shows up. We know that the consumer is a massive amount, 60 to 75% of the U.S. economy. So when the when the consumer is strong like this, okay, it drives the market. So again, adds justification for higher stock prices. All right, okay. Even though I don't like it, that is what it is. Those are the numbers, and that's the result, right? And that's the outcome. Okay. The reason I don't like it is because I just feel like this market's gone too far, too fast for way too long, and it just, it is what it is though, I mean, it just is what it is, right? And I just, we'll get into that. We'll get into this when we get into the technocracy and Vance. I'll save that for then before I start into my whole thing. Okay, now this is the Dow, right? And it is barely breaking to new highs. Okay, so we have these 4 circles, prior highs, 4 prior highs. When you get that, ultimately, there's a good chance when it starts to break out that that's a pretty stable top. So again, we talk about the ceiling becoming the floor. Does the market break through this and does it come back and retest this? That might be what it was doing in here. Right there. Okay, I'll put that. Well, it's not a very good representation. Let me just switch over to circles again. Okay, right around in here. All right, so that might be the retest. It popped above, kind of held up in there, came back, retested it, and now it's climbing. Will the Dow now start to participate? These are the big cap stocks. This is a good indication of capital flows coming in from outside the U.S. So what might be happening now is there was a lot of money on the sidelines. Right, people were concerned with the tariffs. Some people were concerned with President Trump's administration. Some people were concerned with the tariffs. Some people were concerned about, war, right? A lot of different things going on. Markets love to climb the wall of worry, right? And they go down on hope. Okay, have we switched over to that hope yet? Doesn't look like it. Okay, we're still, how long can we climb this wall of worry? Well, as long as we can climb this wall of worry. And so the key is, a lot of this was in like money market accounts and, short-term interest rates, short-term fixed income products, money, CDs, money markets, different things like that. Will people ultimately come out, take that money and move it into the stocks now that we're on new highs? Sadly, that's usually the way that it works, right? They come in at the highs. And again, this is what, if you're big, if you're a BlackRock and you need to get out of a lot of stuff, you need a lot of little people to come in there, right? With all their money. And I think there's like 6 trillion on the sidelines is what someone said. That's a lot of money, right? But how do you pull all that money in? Okay. You've got to lure it in there and then they come in and then they sell against it. And then, sure enough, the retail person ends up buying the top, which happens a lot. So that's what we're watching for. I'm probably going on about this a little bit long, but I think the internals are S&P, NASDAQ clearly at all-time highs, NASDAQ struggling to make all-time highs. That's internal money that would probably be going to the S&P and the NASDAQ more so. Not always, because it could be sovereign wealth funds and things like that. But the Dow is going to usually be bigger money, capital flows from outside the U.S. into the U.S., and we're not seeing the Dow participating. So that's what we're trying to figure out here is what's going on. Why the S&P? Why the NASDAQ? And you could say, well, it's because the S&P has a lot of tech components. But it only has, again, the S&P is much more broad than the NASDAQ, and the S&P and the NASDAQ were kind of vying for position, right? Both of them had their moments of leadership as we got to the full upside in this harmonic. So you can't just say, well, it's because the S&P, because the Dow has a tech component to it as well. So there's something else going on here that the Dow's just not coming along. All right. I think we've hit that one pretty hard. Let's take a quick look since it's debt day. We looked at this. Here's the treasuries. This is what we're going to be watching for, as we go into this rate announcement this week on Wednesday. Can we see it move up to this bright green line, right? That's in the middle of the screen. And I have so much stuff on this screen now. But anyway, essentially this area, right up in here, I'm putting that long yellow circle. Can that become a target on a rate cut? So 25 basis point rate cut probably starts pushing the 10-year note up into that bright green line, right? The solid bright green line. Okay, that's what we're looking for. Okay, and let's take a look at corn real quickly. So we looked at this corn on Friday of last week, commodity. I think it was Thursday and or Friday. And, we talked about this thing being, boy, there's just a lot of stuff on here too. Let me clear this out. And so we got down into this area, right? This circle. Let me put a purple box on this just so we can make sure we've got it shown. All right. So in this shaded area, we were down in this area. Okay. Corn was pretty depressed. It looked like a decent spot to give it a shot. Okay. I know a couple people did because they reached out to me and said so. And Trumpet, we're going to get to her question here in a second because she was asking about that. But let me step out here and let's take a look at, okay. So this is the corn market since that point in time. Right? Let's see if I can pair these up so you can see. Okay. So essentially, this is where that was at, right down in here. Okay, we were somewhere down in here. Let's see Friday. That would have been what? The 7th, like the 12th? I think the 12th, 13th, 14th, 15th. I think it would have been the 12th. So here is the 12th. Let me just mark that. Right, we were talking about that on the 12th. So here we go. So here's the 12th. That would be, let me just get rid of this. So the 12th is somewhere in this area. So we were talking about something like that because that rolls over to the 13th and then we get the 14th of August. But this is of August, right? Let me fast forward here. Yeah. So this would have been about the time. Actually, this would have been about the time, right? Because that's again not much volume in this 5,000 tick. So this is about when we were talking about that. Let me correct that. So this is the time when we were talking about this. This is a monthly over here, right, that we're looking at here. Okay. And that's what we're basing the bigger picture on, right? Is this corn being pretty depressed at a spot where we can manage the risk at the bottom of this trend channel, will that level hold? Okay. And then we fast forward to here. Okay. And this is what we're looking at on a shorter term basis. So again, ideally this would have been great. This was August, my mistake, right? Looking at the August, that's not where we were at. This is where we were at, right? So we're on the backside of this. So it had already bottomed, coming out of it. Now what you're doing is looking for dips, right? Places to come in when the market sells off. If you think that this thing's going to go much higher, the smart thing to do is wait for a sell-off and then come in and buy, right? Add to it when it goes down and let it go up. When it goes up, take some off maybe, right? When it goes down, buy a little bit more. When it goes up, take some off. If you can do that and this thing does move from the bottom of that trend channel to the top of that, which is a massive move, we're talking about what, $3.80 a bushel. Right now it's sitting at $4.20 a bushel. You're talking to $9 a bushel. So you're talking about a doubling in price, which is a pretty significant move. And if you can trade around that idea, you can reduce the risk and stay active, stay involved so that it doesn't slip away from you. That's the concept. Okay. And anything else? I wondered if, I think that's good, right, on the charts. Let me let that go. I want to come back in here and hit some of this stuff on this JD Vance stuff. All right. Okay, let's see if there's any questions in there. It's all tiring after a while. It's all okay. All right. So if there's any comments in there on that stuff, anybody wants to comment on the Federal Reserve, the stocks, the corn, the debt market, what's going on in the Federal Reserve, that would be great. I want to hit this real quickly. Well, this won't be quick. This is kind of a deep thing. This will probably be the first time I plan to do a lot of work on this because it's an important issue. All right. Oh, corn. Let's hit the corn thing for Trumpette. Okay. So she had a question on corn and the corn usage. So approximately 40 to 45% of U.S. corn, the U.S. corn crop actually goes toward ethanol production. Okay. And approximately 15 to 20% goes to food. And a lot of that goes to like sweeteners like corn syrup, cereals, and some other industrial products. There's some industrial products in there that actually are food side of things. And then approximately 40% of it goes to livestock, animal feed. So there you go. You got 40 to 45 plus 40, that's about 80 to 85. And then you got 15 to 20 that goes for human consumption. And a lot of that goes into, like we said, the corn syrup and artificial sweeteners. Okay. And then we have an export market, right? But the export market in corn hasn't been great. President Trump tried to set this up in Trump 1.0 for a lot of soybean sales and even corn sales to China and other places around the world. It ended up falling through. Okay. It didn't really work out. We had COVID and everything kind of came apart with that. It wasn't enforced. These things need to be nurtured, right? When you're making change around the world and you're really trying to create these trade relationships and make sure that they're good for both parties, it really requires some nurturing, and it really never got nurtured. Okay. It was a great idea. There's a little bit of effort put in the front side. And there's a big issue, big contentious issue in the trade negotiations, right? When we were going through all those trade negotiations right before COVID hit. Okay. So the ethanol process is really, it was very, a lot of politics in that. Okay. A lot of this stemmed out of Iowa, Corn Belt. And, ethanol is questionable, right? Not necessarily great additive. It's like 10% is added to the gasoline. It does a lot of damage to plastic gas tanks, especially on boats and things. It does damage to lines. I think they've sort of worked through some of that stuff and they've made additives that help offset the damage that the ethanol creates. But again, was ethanol, again, as we talk about food source, right? And we start turning that into energy. That was the big question when the ethanol craze came along. Food or energy, right? That was the question. Food or energy, corn. Well, it ended up being, 40 to 45% of it goes to ethanol now. And, only 10 to 15% goes to the food side of things. Is that helping drive up the prices for the livestock prices that are going up? Probably so. It's a component to that whole thing. So again, there's just a lot of things that are, that I think are trying to take away our food sources, trying to create this inflationary environment and pushing it toward energy. If they push this toward the fuel that we use, then that frees up, other energy sources that we're not using, right? And it gets so complicated because since this point in time, we've added the electric vehicles, the lithium battery, right? How's that going to end up working out? And we've tried to do some work on the lithium. Lithium isn't all that. Lithium batteries are actually pretty decent. I mean, they're way better than the battery technology of the past. Okay. But a lot of things have changed since then. We're still pumping 40 to 45% of our corn production into ethanol though. Right. And soybeans, right? I'll just leave it at that. Right. So that's the makeup of it. 40 to 45% goes to ethanol. 15 to 20% goes to human consumption side of things. 40% goes to feed livestock and animals. And as a byproduct of the ethanol process, it produces the thing called distiller's grain, and it's a valuable high-protein livestock feed source. Okay, so this also contributes to some of the value of corn as a byproduct of the ethanol. Okay, so that's what goes into the corn. Hopefully that helps, add a little bit to that trade and a little bit of background on that. So you can, again, corn's an easy thing to get to do research on, right? There's tons and tons of stuff out there on that. The agri's are pretty straightforward. Okay, it's just such a depressed thing right now. It's hard to not bring that up and show people because, it can do just as well as stocks, and it can do well even if stocks do start to sell off at some point, right? If we do get to some point of reality here. All right. Okay, so let me tear into this. This whole JD Vance thing. So, on the surface, JD Vance hosting Charlie Kirk show yesterday seems like a great thing, right? He's in DC, okay? It's very official, right? There's some big time guests there, Tucker Carlson, Stephen Miller, right? Go down the list. Lots of great guests. All good, right? Well, maybe not. Let me explain what this technocracy is. So the technocracy is using technology, right, to create essentially an umbrella over everyone that monitors and and um, tracks our activity. Okay, again, think of digital currency. With cash, it's hard to track. Okay, you don't know if you give someone a $20 bill, they give you a $20 bill. Nobody really knows anything about that. As soon as you go to digital, now all of a sudden everything's trackable. And that's not enough. They want to take it even a step further, right? Where it's even more digital and more trackable, right? Connecting this stuff together through databases, connecting, you to what you do, connecting your activities to your money to your activities, and so forth. And that's what we see with like Larry Ellison and Oracle, right? In this Oracle is a big database that powers the central bank, powers a lot of the banking system, and he now is the wealthiest or tied for, in a running with wealthiest person in the world with Elon Musk. Okay, another potential technocrat. All right, more than potential, right? Highly likely. Okay, so let's try to tear into this stuff a little bit, right? So it's basically, I always like to refer to this as, government is a shield for big business to hide behind. Okay, one of my professors told me that, and it really seems to ring true more and more with me every day. Okay, so that kind of goes along with this technocracy. There are people trying to write books on this. It's not an easy thing to get our arms around, but let's see if we can go through this, and this will give you an idea of J.D. Vance, potentially the perfect technocrat. Okay, and how the evolution of the long game of how this gets built. So let me tear into this. All right. So we got phase one of J.D. Vance. Okay, we know his supposed background, right? Grew up in the hills of Ohio, in Kentucky, and basically Appalachia. Okay, poor, right? Broken family, grows up with his grandmother and so forth, right? Ends up, spending some time in the military. Smart guy, obviously, right? Probably very smart, right? Because somehow the people like this get recognized, right? And Peter Thiel. Okay, might as well just throw that connection out there. He has a foundation called the Thiel Fellowship, and his goal is to pluck kids out of college and give them $100,000 to $200,000, right, to go out and study outside of the university, right? Basically, come under our umbrella. We'll teach you what you need to know, okay, or we'll give you, or we'll help sponsor you because you're a really bright mind. We think you have what it takes, whatever that means, right? What does it take, right? To run a company, right? Some tech company. And they need a bright mind for this, right? So the key is to kind of pluck the talent, before it goes to the university. Again, remember back to Charlie Kirk, he was trying to, work within the university structure to take these kids, be a source of education at the university level that had sort of been stolen. Okay, the brainwashing that happens, the propagandizing, a lot of kids grow up with a conservative, they go to college, and now they come back not so much in a conservative, right? School has a way of digging into people's emotions and brains and so forth, all right? So, again, a lot of this is a formational age, right? That's the key. Very formational age, this, 16 to probably 25 age range, okay? Very formational for people's mindsets. So, we've got Peter Thiel plucking these kids off, okay? And he meets J.D. Vance at Yale at a conference in 2011, right? And it was a talk that Peter Thiel was giving on technology and how it was the future. Vance gets encouraged by Peter Thiel. They connect. And at this point in time, also, J.D. Vance, is one of his professors, is telling him, hey, they must have had a discussion about his background. The professor's like, hey, you should really write a book. Supposedly, this is a story. You should write a book on your background. So therefore is the formation of Hillbilly Elegy, right? So during this window of time, J.D. Vance's name changes, and some of you are probably aware of that. His name changes, I think, twice, 2 or 3 times, okay? And in 2013, he graduates and he joins a law firm called Sidney Austin, right? Shortly thereafter, he joins a company called Circuit Therapeutics. He has no science background. It's a science-based company. The question is, how did he get this job? Peter Thiel has a connection at Circuit Therapeutics. So now we see it wasn't just a discussion that happened at Yale after a presentation Thiel was giving. There was some connection here between these two. And Peter Thiel was probably plucking J.D. Vance at that point in time, okay? however they do this. And think of Peter Thiel a little bit like a Jeffrey Epstein. I think he's a lieutenant, right, or a high level minion that's getting directives, money, power, from some level, okay, and now their job is to fill these goals, right? We have these agendas. Or is he acting on his own? I think these people come across this money way too soon. And when you look at how what they call the PayPal, right? The PayPal bros, right? The tech bros, when you see that much formation of mind power, right? Smart people coming together to form PayPal, and then they all branch off, but they all still stay connected. It raises red flags all over the place, right? Did they just become buddies? Are they looking out after each other? Is it like a fraternity? Or is there another level going on here? Is there something from above? Power, some kind of power push from above, right? Again, you got to get the lieutenants, you got to get the soldiers, right? It's just like war, right? It's the same kind of thing, right? You got to have your layers of how this stuff goes on. Okay, so then we get Peter Thiel, right, recruiting these chess pieces, and so, lately we've been caught up in Epstein, okay? Or we were until this whole Charlie thing hit, right? Now all of a sudden that's taken a back seat, and it may resurface in another couple weeks. Who knows? We don't know what is going to be the narrative. And a lot of this is who's driving this narrative? Is it us, or are we being pushed this narrative still? Okay, even with independent media. All right, so anyway, let's keep moving with J.D. Vance's career, right? So he goes off, joins this law firm, doesn't stay there long, goes to the Circuit Therapeutics, no science background, gets in, spends a little time there, leaves there, comes to join Mithril Capital. Okay, Mithril Capital is Peter Thiel's flagship entity. Right, a lot of things spawn off out of Mithril Capital. The whole time he's at Mithril Capital, people were saying like he's barely here. Right, people who worked with him said, "Guy's not even around." There would be a point in time where like a year went by and one of the guys didn't even see him. Now I don't know how big the Mithril Capital office is, but I can't imagine it's more than a couple hundred people. So when you don't see someone for a year at a meetings or anything like that, you have to raise a red flag. And this is the point in time when he's out promoting this hillbilly elegy. Right, if you remember that. Okay, so. So again, what's wrong with all of this at this point, right? You're helping out young talent, you get him a job, and you bring him underneath your umbrella at Mithril Capital, right? And here he is out promoting his book, and, no big deal, okay? Really no big deal, all right? And so far, nothing, I don't see anything wrong with all that, right? However, last night, right, Peter Thiel, just to inject this at this point, Peter Thiel was giving another talk in his series of talks on the Antichrist, okay? And I don't think it's out for public consumption, but it's, people on the inside know that this was going on. And I don't know if anyone will ever record it, if this stuff will ever hit the street or not. But just keep that in the background, okay? Peter Thiel is probably wants to use technology to try to live forever, right? And we've heard how all this stuff, the potential of how this works. Okay, so let's move into phase 2 of this, right? We've got the building of the asset, right? I'm going to call that J.D. Vance, in my mind, now becomes an asset at this point, right? So now they start investing in him between 2017 and 2019, right? Start turning him into a political asset. Vance leaves Mithril Capital. He joins Steve Case, another technocrat type. Steve Case, you probably remember him. Okay, I think with AOL, right? That's where he got his formation with AOL, right? And then he made a lot of money off that. Then he kind of went out and did this entrepreneurial thing, speaking engagements, books, lots of speaking engagements, and so forth. So Vance is tied up with him, right? Steve Case is in this thing called Rise of the Rest, okay? And he writes a book on how entrepreneurs in surprising places are building the new American dream, okay? And so, again, Vance is working with him, but he's not working very much. Again, still out promoting this hillbilly elegy, okay? In 2019, Vance announces his own VC firm, right? Venture Capital, okay? So he's now, again, he goes to a law firm, goes to this, therapeutics company, right? What's the name of it again? I'm drawing a blank here. Circuit Therapeutics, okay? Then he goes to Mithril Capital. He's not very involved, okay? He's not around there very much, again, according to sources. Who knows? But according to sources, okay? But now all of a sudden he gets $100 million to start up his own venture capital firm, okay? And he does it in Ohio, okay? Narya Capital. That's not where you set up. So a couple things that are red flags here. One, it's very hard without any experience to raise $100 million for venture capital, especially without any experience. And two, when he's talking about deals he's going to work on, if he really has only been out promoting, hillbilly elegy, and he really hasn't been involved in a lot of these deals, what's the story you're going to tell? Well, You're not really going to be able to tell much of a story, right? And you're in Ohio, which isn't the VC venture capital, destination of the world, right? It's not, it's heartland America. That's not, there's some VC and angel investing that goes on, but not to that. The $100 million that's a significant amount for a startup VC firm. Narya Capital, okay, is the name of it. Narya 1 and Narya 2, right? It's basically based out of Cincinnati in Ohio. Okay. And so, again, not great for tax laws, not great for laws for this kind of stuff either, right? You would go to Nevada or you'd go to South Dakota or maybe Wyoming, okay? Much better tax situations and better legal structures. So a lot of this doesn't make any sense. Okay, so guess who the investors are in Narya Capital? Mark Andreessen of Andreessen Horowitz, okay? A technocrat, okay, if you've run across him. Eric Schmidt, the former CEO of Google, right? Very, very left-leaning technocrat, okay? And then you've, of course, Peter Thiel. So those are the three guys, three major entities that fund this Narya Capital, okay, to get him $100 million of investment. Okay, part of that $100 million goes into Rumble, right? Peter Thiel and JD Vance are investors in 2019 in Rumble. Okay, they're also investors in a firm called Strive Capital. Strive Capital is this do-gooder financial firm, right? That's located in Columbus, Ohio again. And guess who is the front man for that? Vivek Ramaswamy. Okay, so Vivek Ramaswamy is Strive Capital. He gets some of his initial funding from Narya Capital. Narya Capital is JD Vance and Peter Thiel. Okay, so you can start to see this really nice little tangled web here of technocracy, okay, of these technology people with fair amounts of money. And what are they doing with it? That's the question. Where are they headed with all this stuff? Okay, so let's keep fast forwarding here. So in 2019, JD Vance is kind of doing this side thing, Rockbridge Network. Okay, he co-founds this thing with a guy named Chris Buzzkirk. Right, so they start building out a conservative donor network. Right, the network is centered around Thiel's allies in the network. Right, so this is where they start building alternative power structure outside the typical politics. Okay, so Rockbridge. So here we have Rockbridge. Right, we have this political network. We have Narya Capital. So he's got economic credibility. Okay, it's in the heartland. So this is a perfect mix, right? You got heartland credibility with big tech money. Okay, and this political machine, right? This Rockbridge Capital that's coming into play. Okay, so you got a pretty good setup here. 2019, right? This network is kind of built, right? You got the money, you got the network, you got the backing. Now you just need the opportunity, all right? So in 2021, the opportunity arrives for a political launch. So in 2022, Peter Thiel, okay, who had given money in the past, right? He's been known to be a pretty big donor to political things, like Ron Paul. Okay, he gave, I think, $1 million or $2 million to Ron Paul back in 2012, I think. Okay, so it's not out of the ordinary for Peter Thiel to back political, desires, right? Political people, right? That he can influence potentially, right? That's a lot of the reason why these people backed him. But here's the thing: you're talking about now an Ohio Senate race. Okay, what does that have to do with Peter Thiel in Silicon Valley? Not much. Okay, but he puts $15 million behind JD Vance, right? Unheard of, right? Unprecedented. To put $15 million in an Ohio Senate race behind this guy, JD Vance, all right? Again, who he's had, again, back to Yale, back to Mithril Capital, Narya Capital, right? Strive, Rumble, okay? All these different things, right? So, here's the problem, though, okay? What you need is the backing of President Trump, all right? It's hard to win. If you remember, if you had the backing of President Trump, things were pretty good, okay? And for House races, Senate races, and so forth. If you didn't have President Trump's backing, not so good. I wanted to pull some clips. At some point, I'll pull these out, but you can find them, right? JD Vance trashing President Trump. JD Vance, right, was a couple of the quotes, right? I think one was, Trump is a cultural heroine for struggling Americans, okay? And then he references President Trump as Hitler, right? And so they got a problem here, right? They've got this guy that they've ready to go, okay? They've got him going. He's got the money, he's got the background, he's got the network, right? They've raised the money, he's got the heartland credibility, okay? But he needs Trump's endorsement. So in February 2021, Peter Thiel brings Vance to meet President Trump at Mar-a-Lago. This is where Thiel introduces Trump to Vance, first time that they'd met. After that, there's a 180-degree pivot, okay? And Vance is now 100% behind Trump, okay? After having bashed Trump previously, multiple times, right? Pretty much a Trump hater, to some extent, right? I mean, you can categorize it however you want. Definitely not promoting President Trump. Definitely degrading, not promoting. All right. So, all right. Now at this point in time, there's Thiel recruits 10 other major tech donors to also get behind Vance. This includes David Sachs. Okay. If you know that name, maybe you don't know that name, but David Sachs is our current crypto czar. Okay. Definitely heavy in this crypto space. Okay. He donates $1 million to Vance's Senate campaign. All right. So Vance goes now from an unknown to a front runner. Okay. He's got Trump's endorsement. He's got Peter Thiel's money and backing. He's got these other 10 technocracy type people, okay, that are also backing him. And you get into all these things. Like a lot of this is front funded where you can actually see it. And a lot of these things are, I forget what they're called. They're not 501(c)(3)s. They're like 504, 50. Anyway, there's these other entities where they can push things through that you really can't see, okay? Anyway, a lot of funding going on and it's all in place, okay? So, the Vance gets the Senate race, okay, and wins it. And, a lot of, at that point in time, a couple things go on. We get this Ohio, the train wreck, the explosion. The governor of Ohio kind of botches that whole thing. J.D. Vance goes there, right when the water's toxic. And, remember that big explosion and and so, again, a little publicity things, right, that make Vance look like he really cares about Ohio, all right? Maybe he does, but it doesn't look good to me, okay? So here we go. So why would Thiel even care about the senator from Ohio, right? It just seems to me like this was always part of a bigger setup. Now, so let's go back to the VP now, right? So we have, again, a meeting in June 6th of 2024, okay, where they raised $12 million in one night at David Sachs's house in San Francisco, okay? And not only that, we have a cast of characters that are there. David Sachs, Chamath Palihapitiya, okay? And this is where they coronate Vance, okay, as the VP, right? All of a sudden, this money starts to flow in. And we have, and Chamath, and if you remember just last week, there was a dinner, right, at the White House. And there were 33 tech titans around that table. Chamath Palihapitiya was there with his wife, who's a tech titan, okay? So is Chamath, okay? He's also part owner in one of the major NBA teams. You had obviously Bill Gates there. You had Mark Zuckerberg there, right? For those of us who are watching this technocracy thing going on, right? And essentially, now let me add a little bit more to what this technocracy is, right? It's using this corporate, corporations and technology and maybe not even so much corporations, but entities and money and technology, okay, to drive forth this technology that can make changes to our world, right? Make changes to our country, make changes to our political system, make changes to our manufacturing, make changes to monitoring, make changes to police force, make changes to healthcare, right? All these different, prongs that shoot off of this, these different control arms, right? Okay, so we've got this meeting, right, that occurs in San Francisco at David Sachs's house. Again, he's our crypto czar. Okay, $12 million is raised. There's also other characters there, right? We got this Jacob Hallberg guy who's a Palantir advisor. And this was a full-on, so what we see is everything indicates that J.D. Vance was essentially chosen for vice president by Peter Thiel. Okay. And I know that's very hard for us to think that President Trump's in charge of everything. But when, and I always want to, default to that. But when I see that dinner the other day, and this is what's so hard for me is to watch this stuff go on and no one's questioning why Mark Zuckerberg is sitting at President Trump's right hand. And, at Melania's left hand is Bill Gates. Okay. And Chamath Palihapitiya is next to Zuckerberg, right? And Chamath Palihapitiya's wife is next to Chamath Palihapitiya, right? So you go around this table, And it's all about how much money, right? President Trump says, how much money are you bringing in? How much money are you bringing in? And, it's very painful for me, right? Because, you see this movement and it's this great hope for America to get America back. And I'm just very concerned with this whole technocracy movement that Peter Thiel's driving way more than what we want, all right? And in this technocracy movement. And can we compare Peter Thiel to be similar to a Jeffrey Epstein in terms of, some sort of a government operative or a government liaison, okay, that operates in that realm, right? The corporate, government, political, um, you know, distribution of money for these products that they need. And and I guess just reflecting one more thing on Zuckerberg, right? Here's the hard part is Mark Zuckerberg was the one that donated what $420 million to the drop boxes, okay, that actually influenced and took away the 2020 election, right, from President Trump. And here he is sitting right next to President Trump. And you can't arrest this guy. I mean, there's nothing you can do. You can't call him out. You just let it go. Like, it's just red flags everywhere. Okay. And so hopefully that makes somewhat of a case. There's so much more to be done on this work. In the fact that, we need to lay this out so people can get their arms around it and see what's going on and then make their own decision. Right. And then once they make their own decision, then they can say, okay, what do I do with this? Right. And everybody's decision as to what they do with it is different. Right. Some people are just going to say, I don't care. Some people are going to say, I really care. And then you're going to have everything in between. And people, this leads into so many different things, right? It leads into the healthcare space. It leads into the currency space, and like I've talked about, we are going to at some point end up with another form of currency. Okay. The dollar will ultimately go away, right? Every fiat currency, and it will go away at some point. The question is, does it fail on the upside or does it fail on the downside? And we've talked about that. The upside means hopefully more power for the people. The downside means more power for the elites. Are the elites the same thing as the technocrats? Are the technocrats the new form of elites, right? This isn't anything new, this technocracy. I mean, this has been going on for 100 years, right? They made pushes at this in the 1930s, okay? And then it sort of failed. But the difference between then and now is that now we have so much more technology and so much more ability to reach out into people's lives than we did back in the 1930s, okay? And then we go through the wars, we go through these rearrangements, and then that brings in the whole war component. How does war tie into this? How does a neocon, entity where they're going to be funding, this war, right? We've talked about that with, what's the name? Boy, I can think of the guy's name. I talk about him in here all the time. Carlyle Group, right? Carlyle Group, right? And this Jeff Curry, and the guy who started Carlyle Group, David Rubenstein, okay? And this, this situation where Jeff Curry has said he's seen a couple of these capital flows during his career, which spans about 35 to 40 years, so similar to mine. And this Jeff Curry is saying that, he sees a big flow of capital into Europe, into these smaller, not quite mom and pop shop, arms manufacturers and weapons manufacturers, but something, like small companies. Again, perfect place for private equity to come in, exert their will, exert their influence, and it's hard for people to turn down. It's like all of a sudden you show up and you've got $50 million. You're ready to help these people develop the arms, develop the warfare. And the connection between these two is, okay, one more thing about Ohio. Vivek Ramaswamy is probably almost a guarantee to become governor. Okay. We also have a guy named Palmer Luckey with Anduril coming into Ohio, setting up Anduril, which is a drone manufacturer. Okay. You've got JD Vance, Ohio. You've got, you just look at this power play that's going on in Ohio, and you've got a new bank that's coming into Ohio too. I think it's called ENDERO. Anyway, you could look up bank if you want to. I don't have it in front of me right now, but there's a bank that Peter Thiel, Palmer Luckey, right, and Joe Lonsdale of Palantir are going to be establishing in Central Ohio. And the question is, what are they up to? Is this a replacement for the failed what's the big bank that failed? Silicon Valley, SVB, right? Silicon Valley Bank. Is this a more discrete location to locate a bank? And is Vivek Ramaswamy, who also has a technocracy background, sadly, okay, if you look into Roy Vance and all his other little subsidiaries that fall underneath that, he has all the makings of being this fitting in this technocrat. So now you've got the leadership in Ohio, the governor. You've got Palantir coming in making these weapons, that bridges between war and technology. Okay, and you've got a bank coming in that's funded by Peter Thiel, Joe Lonsdale, Palmer Luckey, okay, for facilitating some sort of a digital currency transfer like they were trying to do with Silicon Valley Bank that flopped, right? And again, who bails all that stuff out? We do. So there's a lot of things to uncover here. There's a lot of stuff to lay out. There's a big map that needs to be created. And again, it's all probabilities, right? It's like we can't be sure that, Peter Thiel gave exactly $15 million to J.D. Vance's campaign, but we're like 80 to 90% sure that that's the case. Okay, next step. What's next, right? Okay, well, did they meet with David Sachs and did they raise $12 million at David Sachs's house? Okay, that's like 80 to 90%, all right? Now, and so as you go down the tree trunks and off to the branches, your probabilities are going to go lower, right? You're going to say, well, we think this happened. This is called connecting the dots. We think that this occurred. We think that that occurred. You don't know for sure, but you're looking for a direction and you're trying to figure out where they're going. And the reason is because, in a sense, this is a potential takeover of our country, right? Through the technology, through the technocracy, through the AI, through these different things, through the banking system, through the healthcare system, and so forth, through the food system and everything else. So, so with that, I think I've hammered that thing. For those of you who've hung around, what do we have? 13. We've got a good group. So, for the good or the bad trumpet. Okay, so here we go. Since corn is 40+% ethanol, with all the projected drilling, will it be affected by the added oil on the market? Yeah, I mean, I think that's true. Everything's connected, and I think that so I think what you're saying is if we're going to see like that chart I showed the other day. Let me put this up. I think this is what you're asking, Trumpet. Let me know if this is not true. So if we see this record surplus building in crude oil, right? Again, we got a 10-year look back on this, and we see, that spike in 2020 to 2.4 million. We see the spike down to minus 1.8 million barrels in 2021. Okay, so again, we see this draw. So again, positive means we have surpluses building. Negative means we have a draw. So if we have 2 years now, 25 and 26, and this is projected in 26, so that's not a guaranteed number, right? So don't think that these two bars are locked in stone in their history. We see the 1.9, okay, which is pressing on the highest surplus, like in 2020 at 1.9, where it was at 2.4. And then it's projected to be 3.3 million of surplus in 2026. So if that's the case, and I think that's your question, if we have that, then will it have an impact on the demand for ethanol? And yes, I think that's the case. It could have an impact. And so, yeah, that would be a negative bias to that stock, to corn, to that corn market rallying. So that would be a negative to it. But remember, if we go into a wartime, which again, we had 40,000 troops just being moved, 40,000 Polish troops being moved onto the Russian border because of these supposed drones, okay, that are coming over the story is coming out of Russia, over Belarus, into Poland. If that's the case, and if this is if Poland and some of these other areas up near that Russian border are going to be the hotspot that are going to kick off some sort of a global war, then corn can rally because, the world needs the food. And what we could see is less, will the drones use ethanol? I doubt it. They're going to run off lithium. So again, there's a lot of things here that you're right. This is a good point. From a fuel source, corn could be under pressure, right? And but from a actual food source or other needs, it might not be. Again, it's at a low risk spot, right? It's at the bottom of that trend channel. There's a reason it's down there. It's because the news is all bad. So again, when the last sellers have sold, and there's no one left to sell anymore, then what comes in? Buyers. Okay. And it doesn't take much to get much of a pop, right? A couple little good news things or bad news. Sometimes bad news could actually be good for corn, right? Right. Good news is bad news. Bad news is good news. And it just depends on your position, right? Your perspective. right now, for people who just go to work every day and pump money into 401ks, the stock market going through these levels is a great thing for them. That's their perspective. They have no idea what's going on. They have no idea who Joe Lonsdale is or who they might have heard the name Peter Thiel. Right, but they have no idea they have no idea who Palmer Luckey is. They have no idea what Anduril is. They have no idea. So their perspective is, look, I just go to work. I put money in my 401k. Wow, look at that. My statement's up. They have no idea what's going on, right? If the money goes to BlackRock, if the money goes to State Street, if the money goes to Vanguard, wherever the money goes and all these people are managing the money, they don't know that they're using that money to work against them, right? They're using that money to come around and work against. So they're using our money against us. And so that's part of the reason that's the big part of the reason, that I want to do this show is to point that out, because I see whether the technocracy or not, that aside, I see this stuff go on in the financial markets all the time, right? All the time, and it's hard because it's like, okay, you can only scratch the surface. How do you really get to the heart of the matter? Well, the heart of the matter would probably be, to go stand outside the Bank of International Settlements in Switzerland, when all these guys show up, and take photos and see how long you live, see how long until you get a bullet through your jugular. You know what I mean? Because, that's the question. How do you call this out? How do we expose this? Number one, because most people don't even know, again, who Joe Lonsdale is or who Peter Thiel is or who, David Sachs is. I mean, people don't. David Sachs is, fronting the next, the cryptocurrency space, and this is where, people are investing in Bitcoin through ETF wrappers, in their 401ks or through money they have, and they probably don't even know who David Sachs is, a lot of people. So this is the problem is, we're just all in this mode of like, okay, the herd's going this way. I might as well just get in and follow the herd, and so that's what we're trying to do is expose some of this stuff, because if we don't, I think this is heading toward a pretty bad place for us. And so anyway, so again, I'm a little bit, part of this is, look, I want to see what happens over the next couple days with these harmonic structures. Do we come back into this 24-165? Do we come back into this 65-74, right? Do we see something that, makes sense to us? Because right now, this just doesn't make sense to me. We just keep running up deficits. And this has been the story for 40 years. This isn't a new story. Just create more debt, stock market goes up, create more debt, stock market goes up. And there is a lot of innovation. And I don't want to take away the productivity and the ingenuity of the U.S. worker, because again, that's the basis for all this. And that's the problem. They're using us, right, to achieve their end goals. And the problem is their end goals are Peter Thiel is doing a series on Antichrist. So, these are the things that, you got to back it up and say, wait a minute, if he believes in the Antichrist, where's he taking us? If he's driving J.D. Vance, if he's driving the stuff and he believes in the Antichrist, and we see J.D. And here's the other thing I want to add. One more thing, right? The title of the show was J.D. Vance hijacks Charlie Kirk's show. And, this fits, if you really think about what happened yesterday, when he went in there from his office in D.C., and he essentially takes over that show, does that kind of fit with what we talked about, right? This progression, right? J.D. Vance at Yale, J.D. Vance, Peter Thiel, J.D. Vance at Mithril Capital, J.D. Vance, Narya Capital, J.D. Vance, Ohio Senator, J.D. Vance, Vice President. How did he get in there, right? And you understand now how the money flows. J.D. Vance, if you watch this progression, and now you say J.D. Vance hijacks Charlie Kirk show, why is that? Again, trying to appeal to that crowd that Charlie Kirk worked so hard and basically gave his life for, right? Going to that influential mindset age, okay? The college, and look, Charlie Kirk was a genius for doing that, right? I mean, but that it requires guts, because you're walking into the lion's den every single day. These kids, a lot of these kids are pretty smart kids, right? They are and they aren't, right? There's a lot of potential, but not a lot of depth. Okay, and not a lot of real world experience. So again, here is, Charlie Kirk going in Lion's Den every day fighting this fight, and then someone just comes in and hijacks it and basically just says, yep, okay, this is all my group now. I'm just going to come in and swoop them up. So again, one show does not make a guarantee. Again, it's a probability. But if you look at where it's projecting, it doesn't look good. And and so that's what we want to do. Watch the next moves, right? Watch what happens next. What part does Larry Ellison play? And there's a whole Elon Musk component to this. That's just think about Elon Musk, right? He comes in after J.D. Vance is announced VP under Trump before they won the election. But you get Elon Musk, and what does he do? He comes in with huge amounts of money, right? And then Doge, right? We get promoted this whole Doge things, which felt really good, right? It felt like we were doing the right things. We're going to come in, we're going to clean up government. The thing that we've always wanted is the people. Let's clean this mess up and figure out what's really going on. But we didn't get that, right? We got a lot of confusion, a lot of misdirection, right? A lot of hope, right? And not a lot of results. How often is Doge mentioned right now? You know what I mean? See how many times Doge is mentioned today. You know what I mean? It's probably not very much, right? How many times will Doge be mentioned over the next month, right? I don't know. Will they revitalize Doge when they need it? Okay, I don't know, right? These are the things I don't know, but these are the things I think we need to be watching for and be aware of. Okay, so with that, hopefully that gives you some background on it. I don't mean to sound all pessimistic. I'm not real happy about the stock market. I'm just going to say that, it is what it is. We've got a couple, things can turn around quickly. We've got some central banks meetings. And again, turn around for what? I, stock market going up should be good. Okay. But when it's going up and no one even knows why it's going up and, all this other stuff is going on, sometimes you need fall and winter, right, to clean out things and let it go through that cycle before you can really get honest, true green shoots that benefit we the people. And I just feel like we just keep skipping over fall and winter, right? I don't even know if we ever really go to spring shoots. We just keep going summer, right? We go from, in the Midwest here, June to September, right, is, your September. We just go June to September, and then we start over June to September, June to September, June to September. And at some point, your soil gets, isn't healthy. Things just aren't healthy, right? It's just not a healthy, things have to go through their cycles, in my opinion, right? And so if we just allow people to get fat and happy, right, and complacent and think that it's all good, at some point, right, we have one more false flag, a war or something like that. And with tokenization, which again, this is another whole scary concept, tokenization, right? They can tokenize any asset, right? We've talked this, I'm going to leave that one alone. I'm just going to throw the word tokenization out there because that's another, I don't think I can even cut it to 5 minutes. The point is, the tokenization is the ability to grab whatever you want and essentially tokenize it. Essentially, I don't know how there's any law attached to tokenization and who's going to enforce this law, right? If you're tokenizing global assets, here I go, I'm going off the deep end already. But if you're able to tokenize any asset you want, farm ground, buildings, cars, rare art, stocks, bonds, anything, if you're able to tokenize it and give it, some kind of a tracking identification. And the question is, who gets to tokenize that? Can we tokenize our own stuff? Who's going to rule the world of tokenized legal, right? Who? And so I've got a meeting this week with an attorney who is well aware of what happened during COVID. Okay. I'm going to be talking to him about some other things, right? Regarding some things at Rumble. But then I also want to talk to him about this tokenization and the concept of who is it that, and I'll be talking with him with a couple people, but the point is, talk to him about this stuff, tokenization, like how can they go about that, and I'm not sure he's going to have any answers, but it's going to probably generate more questions. And sometimes that's all you can get, right? If you can't get answers, just try to grab more questions. And so, all right, with that, I think I need to let it go, hour and 20. And, so with that, everyone, thanks for sticking through this. I appreciate it. Have a blessed day. Come back tomorrow. We'll do energy. And lots of things to talk about on the energy front. And I think we'll let this thing go for a little while. We're going to do a technocracy roundtable next week. I think it's on the 24th. If this stuff is of interest to you and you want to really get with the true experts on this, that's the place to go, right? We've got Patrick Wood, who's been doing this for 30 years, the Technocracy, Courtney Turner, who we've had on the show, in the past, very sharp, doing a lot of work on this, a lot of hard, heavy lifting, okay, without much reward, right? A lot of heavy lifting on this. Aaron Day, same kind of a thing, a lot of incredibly heavy lifting. I think everybody in this technocracy group's working 20 hours a day, you know what I mean? And, because everyone's concerned about what's going on. And again, I don't mean to be all doom and gloom here, right? Because what we do is the markets. But after I saw what happened yesterday with JD Vance and knowing the history of this and talking with Aaron last night, I just couldn't leave it alone, right? I had to come in and talk about this today. Our goal in here is to do markets and markets and stuff like that. This is part of it because we have to understand the backdrop. So hopefully that makes sense. Thanks for listening, and we'll see you tomorrow. Have a blessed day.